Welcome to Get Real with Eddie, where we delve deep into the world of real estate with your host, the designated managing broker of Exit Real Estate Specialist, Eddie Ruettiger.
We hit the news again. Did you hear this?
I did.
You did see this article? I sent it out to the office. Chicago Suburbs listed AM by U.S. News and World Report. By the numbers. What is AM supposed to be? Didn't make that. So I think it's affordable market is what it's supposed to be.
Yeah.
So 250th best places to live in the United States. And
several burbs.
We got a couple. There's a couple here.
Yeah.
Arlington Heights topped the list among the top 10 in Illinois. Buffalo Grove, followed by Naperville, Palos, Schaumburg, Bloomington, Bolingbrook, Skokie. It looks like Des Plaines is on there.
Yeah.
So, I mean...
What happened? That got cut off.
The ads popped up when I hit the PDF version because we're looking at it a PDF. Oh. So, Arlington Heights was ranked 56th. They're looking at household income, average commute time, and unemployment rates of 3.13%. So that was good for Arlington Heights. Buffalo Grove came in 63rd as a solid place to live.
Naperville came in. Naperville has been number one best places to live in a lot of
different surveys. Yeah,
so I'm surprised it's lower.
So 76th Naperville came in, according to the median household income of $174,382.
147.
147.
Yep.
Average commute is 25 minutes, 25.76, and unemployment rate is 5.15. So I think they're looking, they're not listing it, but I'm guessing they're not just looking at the household income. They're also probably figuring in the expenses to live there too.
Yeah.
So,
because let's face it, Naperville is a little pricey.
Oh yeah, it's pricey, especially when you look at the median sales price of properties in Naperville.
Yeah.
So that was kind of cool that we again, so great communities around the Chicagoland area. If you're looking to buy or sell, that, definitely we can help you with and get you in a position to move forward. I wanted to touch on this last week, but we ran out of time because I know with you having college grads and your daughter and what your daughter did on buying her house, this is a huge, huge issue in your heart.
Huge issue in my heart.
And that is, don't let student loans hold you back from home ownership.
And personally, they held me back in the day. I had to finish my paying off student loans.
According to a recent study, 72% of people with student loans think their debt will delay their ability to buy a home. Maybe you're one of them. Are you wondering, do you have to wait until you've paid off those loans before you can buy your first house? Or is it possible you could still afford a home even with that debt? Questions like these are normal. All right. Can you qualify for a home if you have student loans? Well, yeah, you can. Yahoo Finance comments, student loans don't have to get in your way when it comes to becoming a homeowner. With the right approach and an understanding of how debt impacts your home buying options, buying a house when you have student loans is possible.
Yes. I have helped many first-time buyers with student debt purchase their first home.
According to the National Association of Realtors, 32% of first-time home buyers have student loans. 32%. The median student loan debt was $30,000. Chase comments, it's important to note that student loans usually don't affect your ability to qualify for a mortgage any different than any other type of debt. You have it on your credit report, such as credit cards and auto loans. It's just another debt.
Yep.
If you're making your monthly payments and that debt's going down, they take that into consideration.
Yes. Well, and it's, like you said, it's part of your monthly payments and what you can afford. It goes affordability and so forth. Yes. But they have programs.
And you know what? Let's go into that.
Okay.
Let's talk about your daughter. We've talked about it in the past, but your daughter used a great program. And I think it was opened back up this year.
It was opened back up this year.
And it's gone. Money, financing's gone. But let's talk about the program your daughter used with her student loans to buy a house.
Okay. So my daughter had student debt. She is a nurse, so she went to school, had debt. The program allowed for removal of the debt based on your the percentage that would be removed based on the amount of house. So it was kind of weird how it worked, and you had to pay off the entire loan.
The entire
student loan. I'm sorry.
Student loan.
The entire student loan. You couldn't pay like 10 grand towards it. It was an all or nothing kind of thing. So you had to buy enough house to pay off the entire loan.
So a percentage of the purchase price of the house would give you a percentage of amount that would pay off the student loan.
Correct.
Can you say how much your daughter's student loan was at the time?
It was like 30 and change.
So around $30,000, which is the average student loan.
Yes. Yes.
All right. So she was able to buy a house, and the house then paid off the student loan.
Yes.
Okay.
So part of the stipulations where she had to take a class.
Had to take a class.
She has to stay in the home for 5 years.
Has to live there 5 years.
That was basically it.
Okay.
And you had to buy enough of house to cover that entire student loan. So those were the three stipulations.
Pretty amazing program.
So right now she's been in the house 5 years this year.
So she could sell the house.
She could sell the house now free and clear.
Now, like with down payment programs, let's say she had to sell the house at 2.5 years. Does that mean she's got to pay back half of her student loans then? Or would she have to pay back all of the student loan?
Half.
Half.
They would take that half.
Okay.
They would hold it back.
It was a prorated system, just like down payment of programs.
Yes.
When they say, okay, you have to stay in this house for this time. So every year, 1/5 of her student loan disappeared, basically.
Well, she never had it all disappeared.
Mm-hmm.
They paid it.
Yes. But it became a lien on the property.
But it became a lien.
Student loan was paid off, but it became a self-paying lien that expired within 5 years.
Right. So now she's debt-free, other than now she started her master's degree. So she's going back into debt. But she's getting her master's. So she's moving along.
That's awesome.
Yeah. So she's got all this equity that is built into this house. She has a house. She started a family. I mean, it's amazing how this has just been such a great gift.
And she did this 5 years ago.
Yes.
And then we hadn't seen the program for like 4 years. And then last year it opened back up with funding again. And that was a pretty amazing. We didn't have any clients that took advantage of it again.
Just the only one, just that Will County program, but not this one.
Yeah. So, I mean, there's opportunities there. Just like the guy in Australia last week we talked about who went out and got cans and raised about $25,000 in turning in pop cans in 3 years to get himself enough down payment to buy a house.
Yeah. But speak to a lender. That point is, speak to an agent, speak to a lender. They know about the stuff that you might not know about. It wasn't readily advertised that they had this program available.
No.
Had I not been a realtor, I would have never known about this program.
Who was the lender that brought the program to you? Do you remember?
Pat Parks,
Okay, it was
Federal Savings.
Federal Savings Bank. Yeah, that's
Yep.
that's
Huge,
That's a huge program.
huge program.
So definitely something to look into as an option if you have student loan debt. What was the list price of the house, by the way?
List price was $270,
Did you guys have to go over the list to get it?
a little bit.
A little bit? Okay.
Yeah.
So it gives you an idea. Basically, it's almost not little more than 10% of the purchase price goes back to the loans. But, because you're probably just close to 300. But still,
Yeah.
I mean, that gives you an idea if you're wondering, well, how much house do I have to afford? Well, you figure around 10%. It's probably it sounds like it's a little more than 10% goes towards loans, but figure 10% is what you need. So if you got 50,000 in student loans, you may have to buy $500,000. There's probably some caps on the programs,
I was gonna say they have
caps and stuff.
played with it a little bit this year. I'm not.
So it's
I know
probably a bit
it was
different.
a little bit different.
Okay.
I couldn't tell you accurately what changed, but I do recall there were some differences. So, but again, speak to your lender, speak to an agent if you even have an iota of thinking you want to do something like this, because hopefully it'll be back next year.
And this is the one thing that is an advantage of working with our office and the experience that we're bringing to the table. Let's be honest, we're bringing so many different factors in when it comes to, we have this lender that does this, and this lender does that, and that lender specializes in this, and this lender can do that. We have all these different tools that are out there that are available that can be done to help you.
We both actively seek lenders and different types of programs and what they're interested in to better help clients.
Actively seek is an understatement.
Yeah.
Because, we've been talking about, okay, I need a lender for this. We need this stuff taken care of. We need that taken care of. We're always moving, trying to find new solutions and new options for our clientele. Always. So, I'm never sitting passively waiting. I'm trying to find solutions actively all the time. Speaking of an active solution, another option isn't just programs. All right. Sorry, mom and dad, you're getting thrown under the bus.
Yep.
Because mom and dad could be an option. All right. You could use some of your equity in your home and give your child the gift of a home. All right.
Yeah.
To give you an idea, the average homeowner with a mortgage has $311,000 worth of equity, according to, how do you say this new one?
Totality.
Cotality? Is that what they went formerly CoreLogic?
Yeah.
Why?
Because they did. It's like, why did HBO go to HBO Max, go now they're HBO Max again? I don't know.
Well, they bought out Cinemax. That's why. A long time ago.
But then they went to Max. Now, did you hear they're
Going
HBO Max
They're
again?
HBO Max again. I don't have HBO. I'm poor. I don't have HBO or Cinemax. Neither one. I've never had them.
No.
My extent of having HBO was when the cable did the free movie channel weekend. And we were all excited. We got HBO for the weekend. I'm just saying.
Yeah. Well,
I don't know if it's poor or I'm cheap. One of the two. I think it might be now that I'm cheap. I grew up poor and now I'm just cheap. So
we like there's certain shows we just like.
I'm going to probably look into it because I have to be honest. And this is not my generation. I am the Star Wars generation and I will own that through and through. But I do enjoy the Harry Potter stuff. And I know they're doing the Harry Potter stuff. And I think that comes out next year.
Oh, I think.
I don't know if it's 26 or 27, but when that comes out,
Then you'll have to.
I may have to subscribe. The wife, not so much. She could care less about Harry Potter. But I do enjoy that whole world. I think it's a very, very well
Harry Potter.
done
Universe.
Just the universe and everything, and it's just amazing. So, all right, getting back into numbers. According to Bank of America, 49% of buyers between 18 and 26 got their money from their parents to use towards a down payment. So 49% of 18 to 26-year-olds got their money from their parents. 27 to 42, 27% got their money from their parents. All homeowners of any age, 22% it averages out to. So there's a couple other ones that are getting it. And let's be honest, the boomers and mainly the Gen Xers, we're not getting any money from anybody. I mean, we're Gen X. No one pays attention to us, let's be honest. So
I was going to say boomers are the ones that have it.
They're the ones that have the money. Exactly. Compared, the market says of those who did receive monetary aid from parent and grandparents to buy a house, 45% of Americans said they would not have been able to purchase a home without financial support from a parent or grandparent. So, I mean, that's kind of another option. We keep talking about options. I know no one likes to ask people for money, but you know what? You're talking about your future. Hey, mom, dad, we're looking to buy a house. Anything you can do to help? What's the worst? The worst thing you're going to say is no.
Yeah.
I mean, if they can help, great. If they can't, great. I understand. So it's really an interesting scenario.
A lot of kids stay home.
Mom and dad might be willing to help.
They might pay to get you to leave.
You want to leave? Sure, I will pay money to have you move out.
But I mean, that way the kids can save what would be rent towards their down payment.
This is true. This is very, very true.
There are a lot of kids that do that.
Still, I would pay money to move out.
How much you need?
Okay. I'm just thinking, I'm not there yet. He's only 8. I can't pay to have him move out.
Not quite. Well, he's at Grib and Grandpa's all the time.
This is true. He's never home.
I was going to say.
So he came home, and then what did we do? We went for a bike ride the other day. I'm like, dude. It's like, no, I want to go for a bike ride. I'm like, I worked. No, bike ride. Oh, my God. And what we do? We ride to his best friend's house to see if he can go to the park. Really wasn't a bike ride. He just wanted to go to the park. No quality time with dad whatsoever.
No. Well, get used to that.
Yeah, I know. It's going to get worse and worse and worse. It is what it is.
You're done.
So that's
you
okay.
had him for the first date. You're pretty much done now.
That's okay. I'll still be I'll be the parent that'll pick him up in a Spider-Man costume when he really makes me mad at high school. I have no problems doing that. I really don't. So I got a Spider-Man, I got a Chewbacca, and the wife did see a Sonic the Hedgehog the other day. These it's the onesie adult jam pajamas.
Oh.
That we, you'll see every now and then. And I'm like, Eddie, because he loves Sonic. I'm like, you want a Sonic? He's like, who's that for? For me. No, Dad.
No, Dad.
Dad, you're just joking.
We can only hope so.
I'd wear the Sonic. All right, so.
Boy.
Average. Oh, we're looking at Aurora today, aren't we?
Yeah, let's look at Aurora today.
Aurora, Illinois. Average sales price is $334,062 in April. That's up 3.6% from last April. The median sales price is $305,000, and that is up 4.3%. I'm starting to see a lot of these percentages coming in line pretty close to what the national average is. Where we were thinking we were going to see 5 or 6%. We're not seeing that in a lot of the surrounding markets.
No.
Plainfield and Joliet seem to be holding pretty steady. We'll see what May numbers bring. It's going to be interesting to see, because I think May's been a lot hotter of a market, where I think February, March, and April were really cold markets. It was really frustrating, or really kind of stressful for clients.
Yeah.
So
We'll see now what breaks loose.
On the median original list price, they are getting original list price is $315,000, up 6.8% on the median. On the average, you're at $346,267, up 6.1%. Your market time on average is 23 days in Aurora. Now that is up 9.5%, but it is dramatically down when you're looking at the 10-year outlay. I mean, 2015, you were up near 80 days.
Yeah.
I mean, 2019,
That's
you were
crazy.
kind of like around 40 or 50 days. Yeah. So I don't think you were what, licensed in 16?
Yeah.
So yeah,
I
kind of experienced a little bit of that market.
Well, and I've had a lot of clients in Aurora.
Yeah, you have. You've done a lot in Aurora.
A lot
in Aurora. So median time on the market time is 8 days, up 14%. So you're 8 days on the median and 23 days on average. All right.
Mm-hmm.
Months supply. I want to jump to month supply. Month supply is putting us at 0.9 months supply, but that is up 28.6%. Well, yeah, if you're coming all the way from zero, any increase is going to be an increase.
Yeah, right.
I mean, seriously, this was borderline. I mean, it got down to 0.7 months supply.
Yeah.
I mean, that.
And held there.
Yeah.
For 2 years?
It was basically down 0.8. It was 0.9 in September of 2021. And since then, it has been under 0.9, jumping between 0.7 and 0.8, and just went to 0.9 in February. So month supply in Aurora is extremely low. Extremely low.
Yeah.
And when you look at the showings per listing, you're getting 10.4 showings per listing. That is down 23%. Now, this is the first. It's not the first, actually. I'm sorry. Let me rethink that. They're at 10.4, but when you go back again to April of 2019, they are getting 6 showings.
Yeah.
So when you look at the normal market, which we have 2019 as a normal market, 6 showings on average per listing.
Mm-hmm.
They're getting 10.4, but we're down 23% from last year. The sky is now falling. The market is moving forward. It is a competitive market. Do not mess around. It is a competitive market.
Yeah. Mess around and lose out is what's going to happen.
All right.
Yeah.
You know, we have some funky terms. WIC. I think let's talk about that when we get back from the break. Keep it here with Get Real with Eddie.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Ruettiger from Exit Real Estate Specialists and Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Are you ready to make your next move in real estate? Look no further than Exit Real Estate Specialists, your innovative leader in the industry. At Exit, we're not just about transactions. We're about building relationships and fulfilling dreams. Step into a community of empathetic, well-trained professionals dedicated to your success. Our Exit Real Estate professionals are more than just agents. They're your trusted advisors and allies in the journey of buying, selling, or investing in real estate. Whether you're selling your home or searching for your next investment, trust Exit to provide an excellent experience from start to finish. Our commitment to putting people first means you receive personalized attention and support, ensuring your real estate goals are met with success. Call us today at 815-823-5478 or visit exitrealestatespecialist.com to learn more. Exit Real Estate Specialists, exceeding your expectations every step of the way.
The face for radio, the heart for real estate. It's Get Real with Eddie.
I love real estate terms.
They're just...
I hate real estate abbreviations. The terms don't bother me. It's the abbreviation.
It's the abbreviations.
What does WIC stand for?
I have no idea.
Walk-in closet.
Oh, okay.
It's supposed to be
like for a listing.
Yes.
Okay.
Yeah.
All right.
But see, that's the problem.
That's the problem. Like in reference to what?
But even when you're in reference and you're reading remarks, they just throw in WIC. And there's a reason they used to do this. They used to only have 500 characters allowed to describe the house.
Mm-hmm.
Now I think we can put 4,000 or something like that.
Something ridiculous.
I have tried to fill it with listings. I can't do it. I cannot fill up that description area. I mean, I'm trying everything I can throw in there, including the kitchen sink, no pun intended. But I cannot fill up the space. But that's why I will not put in like WIC. No, I will write in walk-in closet because you don't know how many people have the background to understand what WIC is supposed to mean.
Right. You don't want them turned off.
Yeah.
When they're reading it.
And speaking of turning off, that's what this is about, is the terms every buyer should know. These are buyer terms you should know. As Redfin explains, having a basic understanding of the important real estate concepts before you start the home buying process will give you peace of mind. Now you can save for a future fortune in a future. All right, so.
And WIC is not one term that you need to know.
No, you don't need to know it. And can we stop abbreviating stuff in the MLS? We can put 4,000 letters in there. Okay, I'm done. Let me get off that soapbox. Hold on. All right. Definitions and terms, and this is from the Federal Trade Commission and First American. Appraisal. A report providing estimated value of a home. Lenders rely on appraisal to determine a home's value, so they not lending more than its worth.
Yes.
Got a couple things I'd like to add.
I was going to say, I'd really like to add something else to that.
One person's opinion. Sorry.
Yes, but there are some keys to that as opposed to a CMA.
Yes.
A comparative market analysis. Let me use that entire phrase rather
than the abbreviation. Yes.
So there's a difference between an appraisal and a comparative market analysis.
And what is the difference?
An appraisal is a bank representative that is coming out, and they have criteria, specific criteria that they use, and opinion, but specific criteria as in closed, homes that have actually closed
Yes.
within 1 mile,
Yes.
and preferably 3 months.
Yes.
Then they start adjusting
Or expanding.
or expanding from there, and based on the type of house that you are currently selling and what has closed. A comparative market analysis is done by a realtor. We take into account not just what closed, but what's currently on the market,
Yes.
what's pending.
Yes.
I go out 2 to 3 miles and within the last 3 months to 6 months sometimes.
I'll go out. Sometimes I go out 2 or 3 miles. I try not to.
I try not to. It depends
Depends.
on the type of,
And
but I'll do a neighborhood.
appraisals will go up to 3 miles out, and that's where we got the 3 mile rule.
Yes.
Appraisers will try to limit adjustments to less than 20%.
Yes.
Okay. So age, different things like that.
Yeah.
They try.
Is it a brick? Is it vinyl siding?
Yes.
Is it, a basement, not a basement, et cetera, et cetera.
Yeah. So there's a sudden difference. The biggest difference is we're looking at what's on the market. All right. Versus they're only looking at closed properties.
Yes.
And that's the biggest decision.
I
Now,
want to see your competition.
Exactly. I want to see what the competition is. Now, the other aspect to that is I have had some conversations with appraisers
Mhm.
that back in 08 and 09, because I've been around for a while, they would, even though this house that was just like it sold for $300,000, they wouldn't give you a $300,000 value.
Because
Rule of substitution. This one closed at 300. This one you got an offer at 300. Identical property. But there's 3 more properties that are also identical that are at 275. And the rule of substitution I can substitute and buy the one for 275. And that's in the market trend when the market trend was going downward on price. I've used that argument with appraisers on the flip in this market that we sold for 300,000. We sold for 310. That one, yes, sold for 300. But the next 3 that are available are at 315, 320, and 325.
mm-hmm.
So there is some aspects to an appraisal in some cases. Now, on a trending market upward, they're not that likely to do that. But on the trending market downward, I was
they're
there.
going to do that.
Oh, they did it. They did it.
They are going to do
Yeah.
it.
So
They're going to be more conservative. They're from the bank.
yes, the appraisal is there, and that last line is the true. Determining that the worth of the loan is the value of the house, that they're not giving out more money than what the property is worth. That's the aspect. All right, contingencies. All right, contract conditions that must be met, typically with certain time frame or specific date. For example, a home inspection is a common contingency. While you can waive these to try to make your offer more competitive, it's generally not recommended.
Right.
That's a contingency. Financing is a contingency.
Yes.
This
Selling your home in order to purchase this one
is a
is a
contingency.
contingency.
Receiving the disclosures are a contingency on
In
our
the
contract. And our contract, yes. So that is a contingency. Closing costs. A collection of fees and payments made to various parties involved in your home purchase. Ask your lender for a list of closing cost items, including attorney's fees, taxes, title insurance, and more. Okay, that's a pretty good description of closing costs.
Mhm.
Keep in mind, buyers can't just go and say, I want to pay for all the closing costs. Doesn't work that way. Stop watching what's on TV.
Yeah.
It's literally, you have to pick a number. And there's only so much you can get back in closing costs depending on the type of a loan. If it's conventional, it's usually 3%. If it's an FHA, you can get up to 6%. Usually. Down payment. This varies buyer to buyer, but it's typically 3.5% to 20% of the purchase price of the home. There are even some zero down programs available. Ask your lender for more information. Chances are, unless specified by your loan type of lender, you don't need 20% down.
Right.
But
We
yes,
just talked about vet loans,
yeah, the other day.
VA. Yeah,
last
week.
But you can put down more than 20%.
Sure.
30, 40, 50. I'm seeing it all the time.
Oh, yeah.
Escalation clauses. This is typically used in highly competitive markets, ours. It's an option added on the real estate contract that says a potential buyer is willing to raise their offer on a home if the seller receives a higher competing offer. The clause also includes how much a buyer is willing to pay over the highest offer.
Right. Use them many, many times.
Mortgage rate. The interest rate you pay when you borrow money to buy a home. Consult the lender so you know how it can impact your monthly mortgage rate payment. Pre-approval letter. A letter from the lender that shows what they're willing to lend you for a home. This plus an understanding of your savings can help you decide on your target price range. Get this from a lender should be one of the first steps in the home buying process before you start browsing homes. Is there any other terms that you think someone should know about? I think DTI, when you're getting a loan, it's debt to income ratio.
Yeah.
Which means how much money are you putting out and paying your debt every month versus how much money you're bringing in.
Yes.
You're bringing in $3,000 a month and your monthly expenses are $2,000. So that's your debt to income. And that's looked at on a percentage basis, how they calculate that.
Yes. And the lenders are the ones that
do the calculation.
calculation.
Yeah, it's not hard. Just take 2,000 divided by 3,000 and you've got it. I mean, so if my scenario was right there, 2,000 divided by 3,000, you're looking at a 66% debt to income ratio. 67 actually. So usually that would be what they call your back end.
Mm-hmm.
And the back end would include all of your debt. And usually they want to see that number under 50%.
Yes.
Ideally, under 40%, honestly. All right. We have a house that I think is going to be coming to market in the next week or two.
Do tell.
This is 1128 North Hickory Street in Joliet. It's going to be listed at $150,000. It's a small 2-bedroom, 1-bath home. Got a nice living room, dining room set up. Located again at 1128 North Hickory. There is a basement to it. Kind of more, it's an older home, so it's a little bit more of a cellar style basement, not more of the modern basement. But yeah, $150,000. It does need work. It's going to need some work on it, so definitely want to check that out. All right, when we get back after the break, what do I want to talk about? What buyers need to know about Homeowner Association.
It's Eddie Ruettiger
Keep it here
from
with Get
Exit
Real.
Real
Okay.
Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Are you ready to make your next move in real estate? Look no further than Exit Real Estate Specialists, your innovative leader in the industry. At Exit, we're not just about transactions. We're about building relationships and fulfilling dreams. Step into a community of empathetic, well-trained professionals dedicated to your success. Our Exit Real Estate professionals are more than just agents. They're your trusted advisors and allies in the journey of buying, selling, or investing in real estate. Whether you're selling your home or searching for your next investment, trust Exit to provide an excellent experience from start to finish. Our commitment to putting people first means you receive personalized attention and support, ensuring your real estate goals are met with success. Call us today at 815-823-5478 or visit exitrealestatespecialist.com to learn more. Exit Real Estate Specialists, exceeding your expectations every step of the way.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
Stocks may succeed, stocks may fail. Real estate is always there. It's Get Real with Eddie.
Do you have an HOA on your house?
Yes.
You do. So what does your HOA cover?
Our HOA just covers the very basics. Common grounds,
Being cleaned
the
up.
fines, the retention ponds. In fact, a year or 2 years ago, we had the fountain put in to keep from the stagnating water. So, we had one of those put in, that kind of stuff. So that's what our HOA covers.
Yeah. And because you have a single family house, you don't have a duplex. So.
Right. We have a single.
So, yeah. So you're cutting all your own grass. You're doing all this. So,
yeah. But the common areas, like the entrances, the little islands that, are on the roadway, that kind of thing, they cut all that.
They cut and maintain all that.
Yeah.
Yeah.
Around the retention
and
ponds.
there's benefits of a HOA, and there are great HOAs out there. There's a good chance the HOA is one of the reasons why everything looks so good. So one of the first things that an HOA addresses is the neighborhood maintenance. Many HOAs cover landscaping. Some do snow removal and upkeep on common areas, and helps maintain the neighborhood's overall appearance. So there are some really good things for an HOA, because I know they get so beat down.
The inconsistencies of HOAs is the real problem.
I'm not arguing that. And you know what? I have to be honest. I always put that back on the homeowners, because every single HOA has an HOA board, and you have to be a resident of the neighborhood to be on that board.
Yes.
Now, the HOA board and the HOA management company are two different things.
Yes.
And the board is in charge, not the management company.
Right.
So the board needs to be setting the direction, the guidance.
So get on the board. Show up to the meetings.
Absolutely. Amenities that some HOAs may have, depending on the neighborhood, an HOA could include access perks like a pool, clubhouse, fitness center, even private security. In these cases, while you have to pay an HOA fee, you also save money in some ways because you don't need to have a separate gym or pool membership.
Right.
Property value protection. Since HOAs enforce common standards, they prevent a home from falling into disarray, so you don't have to worry about nearby eyesores hurting your property value. The pink Pepto-Bismol house. Did I ever tell you that story?
No, I haven't heard the pink.
Oh. So one of my mentors who's still in the business sold a house up, I believe it was up north somewhere. I'm not sure where it was at. And the next door neighbor had the house that was painted pink, Pepto-Bismol color.
Pepto-Bismol.
Pink. It was just
I had bathrooms like that.
atrocious. It stood out. Was the ugliest thing they could see. The house that was for sale next to it, or across, I can't remember, had been on the market for like 2 or 3 years. Nobody would buy the house because of the pink house.
Yeah.
The price had gone down dramatically. My mentor was walking out with a client and ran into the owner of the pink house. Turns out the owner of the pink house and the owner of the house that was for sale did not get along at all. And they were, I guess, very, very, very bitter towards each other.
Oh.
And that's why the guy painted his house pink, because he was trying to sell the house. And he painted this obnoxious pink color, and it cost the seller thousands.
Does he realize that his property value is going to take a hit too?
No, I agree. I understand what you're saying, because now that comp is that. But he told the owner, first off, he was in no rush to sell, so it wasn't a big deal. But he told the new buyer right in front of my mentor, said, you buy that house, you can pick whatever color, and I will be painting my house the very day you move in. You tell me what color, and you can pick it. I don't care. And that's when they turned out to be best friends. He bought the house next, and the guy painted, I don't know what he painted, and painted the house back to another color. And the new owner and that guy, so
the new buyer and the new owner
and the pink
and the pink house owner.
Yes, the formerly house known as Pink.
Yes,
became really good friends. I mean, so yeah, but yes, I agree that you just hurt your own house value because now you got this one comp. But you could make the argument that that comp is not a valid comp because at the time there was a stigma in the neighborhood and the stigma had been resolved. So you could have that comp thrown out.
Yeah, I guess you could make that argument.
So I'm just saying, but this is
wow, that's terrible though.
This is how an HOA protects your property value, because he wouldn't, if he had an HOA, he would probably not be allowed to.
He would be fined.
Oh,
to do that.
Severely, continuously.
Yes, like every month
until the house was repainted.
And HOAs can put liens on your house. They can take your house.
Oh yeah, yeah.
They can take your house.
Yeah. So, in some communities, HOAs even care for exterior maintenance, roof repairs, and other shared responsibilities, reducing the work for homeowners. Now, I've had this argument, or I'm really not argument, but discussion with clients. Just because the HOA pays for the roof does not mean you're not going to be paying for the roof.
Oh, it just means get ready. You're going to be paying for the roof because it's going to come out in your now raised HOA dues.
Or a special assessment.
Or a special assessment.
So, yes. So, I mean, it just all depends on that. So, but there's new single family homeowners. There is a increase of pretty significant. 81% of new single families all have an HOA. And a lot of people want that HOA. They want that covenances. And a lot of the stuff that was getting hit at the beginning has seemed to go away. So one of the things was you couldn't put no flags. Well, that got taken to a Supreme Court. They have to allow the American flag, and I think they have to allow the POW flag. I'm not 100% sure on that. So, but you cannot obstruct the United States flag being flown in someone's yard or on someone's property. So a lot of HOAs have backed off of stuff like that. There's some things they got bad.
I was going to say some HOAs, and I have dealt with some doozies.
Can be challenging.
Can be very, very challenging.
Can be very challenging. So I know of one where they literally will fine you if your garbage pack cans are not back on the same day as garbage.
Oh, yeah.
Yeah. Yeah.
I have had a client who lived in the area.
Yeah.
And the HOA would fly drones to check to make sure in your yards and backyards and stuff if there was any garbage or if you weren't mowing, that kind of stuff. They'd fly drones.
Wow. That's a little aggressive.
Yeah.
Especially if the backyard's fenced in. I mean, and you can't see.
Yeah.
There's a lot going on there. That's
it was very aggressive.
Awful lot. So, all right. Well, that wraps it up for Get Real with Eddie. Don't forget, check us out online 24 hours a day, 7 days a week at getrealwitheddy.com, talking about your largest investment, your home.
Thanks for listening. Eddie Ruettiger is the designated managing broker and owner of Exit Real Estate Specialists, located at 2750 Caton Farm Road, Joliet. License number 481014247. For questions, call Eddie at 815-823-5478.